Good morning once again, and a warm welcome to all of you to our webinar on the topic Securing Tomorrow Today, Unpacking Ghana's Social Security Compliance Landscape. So thank you all for joining what promises to be a power-packed session with conversations on pension compliance in Ghana, which is a topical issue for employers and employees alike. My name is Blessa Dai. I'm a senior manager in the tax and regulatory unit of Deloitte Ghana. Before we begin this session, I would like us to take note of a few things. So session is strictly online, hence microphones of participants have been muted. At the appropriate time, when it's time for the Q&A session, microphones will be unmuted and questions as well as contributions would be received from participants. Before we begin this session, I would want us to walk through the outline for today. We'll begin the session with a welcome address from our host, that's Gloria Boydoku. Gloria is a partner in the Tax and Regulatory Unit of Ghana. We are also privileged to be joined by a special guest of honor, that is the Director General of SNIT himself, Mr. Kwesi Afre-Baini. We'll take a presentation from one of our senior managers in the person of Henry Corte, then we'll zoom into the panel discussion. So our panelists have been carefully selected with representatives from NPRA, SNIT, and Petra. We would also have our presenter, Henry Corte, joining us on the panel for the panel discussion. Last but not least, another representative who is a senior manager here in Deloitte will join us. We'll commence the session by taking the welcome address from Gloria. Gloria, as I mentioned, is a partner in the Tax and Regulatory Unit of Deloitte Ghana. She oversees the pension, payroll, compliance, business process services unit here within the tax unit. She has over 20 years of experience in these areas, and she's provided services to many multinationals, locals across all sectors. She has qualifications in accounting, hence she is a member of the ACCA, ICA. She also has a master's degree in finance. So without further ado, I would like to call on Gloria to take over. Thank you.
Right. Thank you, Bless. Good morning, distinguished panelists. Our esteemed keynote speaker, the Director General of the Social Security and National Insurance Trust, Mr. Kwesi Afre-Baini, colleagues and participants. It is my distinct pleasure on behalf of Deloitte to welcome you to this important webinar on the theme, Securing Tomorrow Today, Unpacking Ghana's Social Security and Compliance Landscape. I strongly believe that the quality of our future is shaped by the depth of our understanding today. Ultimately, it comes down to the actions we take based on what we know. The reality is that Social Security and compliance affect every stage of our professional lives. They influence how we prepare for retirement, how organizations fulfill their obligations to employees, and how businesses build trust, resilience, and long-term sustainability. As Ghana's business environment continues to evolve, employees are becoming more interested in understanding how social security systems work, what benefits they are entitled to, and how today's contribution can provide protection and security for tomorrow. This is why the theme, Securing Tomorrow Today, is both timely and significant. It reminds us that the future is not an event that simply happened to us. Rather, it is shaped by the decisions, investments, and commitments we make today. Our goal is to help reshape perspective, build confidence, and ultimately empower individuals and businesses alike to take deliberate steps towards securing their future, starting today. This webinar therefore provides an opportunity for us to deepen our understanding of Ghana's social security and pension compliance landscape, exploring emerging developments, address common challenges, and identify practical actions that can help both employers and employees make informed decisions. We are privileged to have with us experienced experts and thought leaders who will share valuable insights and practical perspective on this important issue. I encourage everyone to actively participate, engage with the discussion, and take advantage of the opportunity to ask questions and learn from one another. The security of our future is determined by the actions we take today. By making informed decisions, embracing compliance, and investing in long-term security, we lay the foundation for a more resilient workforce, stronger organizations, and more prosperous Ghana. Thank you once again for joining us. I wish you all an insightful and engaging session. Welcome to the webinar, and let us begin. Right. I will continue immediately with the introduction of our keynote speaker. So just give me a moment. Okay. It is my honor to introduce our keynote speaker for the day in the person of Mr. Kwesi Afre-Binding. Mr. Kwesi Afre-Binding is a highly accomplished financial services and public sector leader whose career has been defined by excellence, integrity, professionalism, and an unwavering commitment to service. He is a seasoned banker, a distinguished chartered accountant, and a proud Santa Clausian. He brings extensive expertise in financial management, investment strategy, corporate governance, risk management, and institutional leadership. As Director General of the Social Security and National Insurance Trust, SNIT, Mr. Binding is leading the transformation of Ghana's basic national social security institution with a strong focus on sustainability, service excellence, innovation, and stakeholder trust. He is driving initiatives to strengthen the long-term sustainability of the SNIT scheme by expanding coverage, enhancing the scheme's value proposition to make it more attractive and relevant to members, improving operational efficiency, strengthening investment performance, and leveraging technology to deliver superior value and service to contributors and pensioners. Guided by a vision of retirement income security for all workers, Mr. Binding is committed to building a resilient, trusted, and future-ready institution that responds effectively to the evolving needs of current and future generations while contributing to Ghana's socio-economic development. Mr. Binding serves on several boards and governance bodies, including the SNIT Board of Trustees, the Board of Ghana International Bank, UK, the Board of the National Identification Authority, and the Executive Council Board of Regents of the Daniel Institute. Internationally, he chairs the West Africa Bureau of the International Social Security Association, represents West Africa on the Global ISSA Bureau, and serves on the ISSA Nominations Committee for the 2026 to 2028 tenure. Beyond his professional achievements, he's a devoted family man, yes, and a passionate dog and plant lover, and a leader driven by commitment to excellence and a desire to leave a lasting legacy. Well, it is my honor, Mr. Binding, to welcome you to the webinar. If you can hear me, over to you. Thank you.
And everyone, good morning. And I think it's a privilege to be here and to be part of this conversation. Let me commend Deloitte Ghana for this initiative. It actually speaks to three things. One of the cardinal factors to help strengthen any social protection system is awareness. And conversations like this brings to the fore awareness of the opportunities therein, awareness of the schemes that are available, and useful feedback that helps shape the future of social protection. The other one I would want to speak on is about active engagement. The ISA, which is the international body that regulates and governs social security globally, considers active engagement as a very, very, very important aspect of shaping the narratives, the conversations, and the future of social protection. So clearly, you are on the right track, and you are setting the building blocks for all of us to have the conversations required to improve the scheme that we have and the architecture that we do have. Now, why does social security or social protection matter? It's about the future. It's actually an investment in each of us, our future, not just the future that we want to just be a part of, but the future that builds economic and human dignity. Because at that point, you no longer can just rely on social connections, possibly your children, for how you want your future to be. But you're actually planning for it and making sure that you are ready at the time that you need it most. Why should a young person be interested in social security, especially when you are not close to the times in which you'll be going for pension? The cheapest social security that you can have is to plan early. Not only is it cheap, but it also builds you for the best ahead. If you join in any scheme at a much later date, it limits the number of months that you can contribute. And for a lot of these defined benefit schemes, especially like the one that we run in Ghana, the number of months that you are part of the scheme matters greatly. Ghana today, you can join the scheme between 15 years to 45. We do not accept people being above 45 because then they will not meet the minimum criteria required for pensions. But we do accept from 15 up to 45. Now, when you join the scheme at 45, it means that you meet the barest minimum, the 180 months required to qualify for old age pension. And what that also means is that your guaranteed pension right would be around 37.5 of your average gross over of your average best 3-year contributions. If you join early, you can go up to 60% of your pension rights. So if you go as high as 420 months, if you contribute for 420 months, you will qualify to get us guaranteeing 60% of your best 3 years average as your pension. What does this mean? You know, pension is not taxable. So especially for those on a higher tax bracket, 30% and above, at that point where your guaranteed pension is 60%, you're actually almost close to your net earnings during your working period, because the 60% is on the gross and the actual earnings that you were taking home was based on your net. Now, your pension is a function of your contributions. We at SNET, per the law, we use the average of your best 3 years. If your best 3 years isn't enough to take you onto the higher zones, as a social organization, we also set the minimum pension that we would want to pay to anyone. And currently, that is what defines those on the very base pension of 400. Because for those people, if you do the calculations, they do not even qualify for the minimum pension. But we believe that any social system should protect the vulnerable. So those are awarded. Now, the architecture in Ghana is such that we run a 3-tier pension system. This was based on our 766 promulgated in 2008. So SNET runs the mandatory tier 1. And SNET today collects 13.5 of your basic salary for the scheme and its running. Out of the 13.5, 11% is actually what goes strictly into pensions, and 2.5 goes into health insurance, not only to fund the scheme, but also help provide insurance cover for our members and our patients. Now, beyond this, there's the tier 2 managed by the corporate trustees. Again, that is also mandatory, and that's 5%. The two put together brings you up to 18.5% of your base. The 18.5 is mandatory and all are required to do so. The worker contributes 5.5 and the organization contributes the remaining 13%. The third tier, which is optional, what we typically call provident fund, provident schemes, allows another additional contribution of up to 16.5. That 16.5 is optional. So there are organizations that have it, there are organizations that do not. And it varies organization to organization in terms of how the contribution is done. For some, the worker contributes more. For others, the organization contributes more. If you put all this together, Ghana gets into the bracket of about 35% of the basic as the contribution required. 18.5 mandatory, but 16.5 non-mandatory. How does that compare globally? How does that compare with Africa? Currently, the only African country in the top 20 in the world in terms of contribution rates is Senegal at 37%. For them, the 37 is mandatory. So it's not optional and everyone is required to get to that level. Our 35, 18.5 is mandatory, 16.5 is not mandatory. For the 18.5 mandatory, if we compare that to our peers, in West Africa, we are number 2. In Africa, we are number 28 if you look at the total. So like there are countries that provide other benefits like maternity, accident benefits. We do not provide that in Ghana. But for the global picture, we are number 28 in Africa in terms of rate using the mandatory 18.5. In West Africa, we are number 7. But for this type of scheme that we run, we are only number 2 to be served. So at times the conversations come up around how adequate is our pension rate. And it's one that has stimulated new conversations around what do we do? Do we touch the rate? Do we move the rates around? Do we make all the 35 mandatory? Those conversations are going. But even at the 18.5, we are tracking well with what others are doing for the type of scheme that we do run. Now, let me also share some perspectives on the benefits of the scheme. Ghana's 60% guaranteed pension right, that is if you do 420 months and above, compares very, very favorably with the global numbers. The OECD numbers today are just a little above 52%. EU, on average, is around 54%. There are countries like Netherlands and the like that are above 80%. But if you take the European Union average, it's around 54%. We are actually better than the United Kingdom. We are better than Germany. We are better than the USA in terms of the guaranteed pension rights. So really, if you're looking at the numbers and the computations, we are well positioned. What are we doing right? And what do we need to do more? And I'll share perspectives on that as we all engage each other to shape the future of our pension scheme. What we are doing right is that we are beginning to extend social protection beyond the formal sector. Currently for SNIT, we have a little above 2.1 million active members. The pensioner population is currently around 267,000 members. Now, over significant numbers, in fact, over 95% of our members sit in the formal sector space. The informal sector numbers are growing, but it's currently around 51,000 members. However, over 80% of Ghanaian workers sit in the informal sector. And that is an area in which we definitely need to improve on the numbers and have the strategies to ensure that not only are we bringing in the numbers, but we are bringing them in a manner in which their future will be a dignified future. Now, how strong is our scheme? And that question keeps coming up. Currently, our support ratio is about 8-1. And again, it compares favorably with global numbers. ISAP, which is the international body, gives a benchmark of 8-1, and Ghana is currently at 8-1. Our strategy as a trust is to try and move this to 10-1 by 2028, because we just want to make sure that we have enough buffers in place to support the scheme. The assets under management, which is practically what is available to pay pensions, today sits at about 34 billion cedis. It's grown over the years and it keeps growing. But importantly, we not only need to improve on accessibility, but we need to make the scheme attractive for the informal sector players. Mind you, for the informal sector, it is optional. It is not compulsory. So the scheme itself needs to be attractive enough for people to join the scheme and to help us run the numbers. And that is why in recent times, if you've realized some of the things that it is doing, it's a deliberate strategy to improve on the attractiveness of the scheme. We recently launched telehealth for our pensioners to allow people from wherever they sit to have the opportunity to have the best of healthcare. Ultimately, that will be rolled out to all members. That helps improve the value proposition and makes it attractive. In July, we plan to launch a discount scheme for all our members by issuing Visa cards to all our members for free, which then, when used at various service points, enables you to get discounts. Part of the strategy of improving on the value proposition. But having said this, let me highlight the value proposition of the scheme itself, which is stronger than even the add-ons that we are bringing on board. One, the scheme guarantees you monthly pensions in old age. So until you die, the trust will continue to pay you once you are on pension. And currently, there are pensioners who are above 100 years old. The last time I went to Cape Coast to visit the oldest pensioner, who is 115, 1st July, I will be visiting the second oldest pensioner in Wahab, who is also around 112, a lady. She's actually the oldest lady that we have on the scheme. So that one is there. The most expensive pension or the most expensive benefit that we do have is invalidity. When a member becomes permanently incapacitated, we immediately put the person on pension till death. If you recover from that incapacity, we waive the pensions that we've paid to you, you join the scheme again, or you continue with where you left off and still have the full benefits that you would have had even if the pensions have not been paid to you. So, and all you need to do is that you must have contributed for 12 months out of 36 months. Yes, out of 36 months, your last 36 months. So that's a very, very generous value that we have in the scheme that a lot of people haven't paid attention to. Embedded in our scheme is actually life insurance as well. Because when we lose a member, what we try to do is to estimate the pension that that member would have been on. And then using the treasury bill as a discount rate, we will then bring it into today's value and pay lump sum to surviving beneficiaries who have been named by our member. So you basically have a life policy cover by just being part of the scheme. Now, if you are non-Ghanaian and you're working here as well, you can't join the scheme. And when you are permanently leaving Ghana, we pay you your immigration benefits. For those who are not able to meet the minimum qualifying criteria of 180 months, which is 15 years, we then pick your contributions, calculate the interest on it, and make that available to you as a lump sum payment as well. So if you take a look at the existing value proposition itself, it's already very strong, it's already very generous. But to make it appealing to the informal sector, we are then introducing these new add-ons to ensure that people just want to be part of the goodies that we do have on offer as a trust. Now, there are a lot of things that various stakeholders have to do to make this scheme the best that we all seek it to be. One of them is you and I. How do we monitor our contribution records? Luckily, as a trust, we've decided that digital by default. So the easiest way to actually engage us is to use our digital channels. And we've enhanced our digital channels to make it easier for you to interact with the trust. So you can change your nominees, you can check on your contribution history to be certain that what is being deducted from your salary is actually coming through. For regulators like the NPRA, they keep us on our toes and they ensure that the regulatory framework itself is supportive of growth and supportive of the people that we are required to protect. For us, it's a trust. We have a fiduciary relationship with you. We actually have the responsibility as well to ensure that people who are organizations, when they deduct, bring the contributions to us. That is a legal obligation that we do have. And we've been working with the courts to enforce as a last resort. But we also believe that compliance is actually much more of a relationship issue than just an enforcement issue, because there's a limit to which you can use enforcement to ensure compliance. Our model has evolved over time to allow us to understand organizations better and to treat organizations as clients in a relationship, such that we mitigate the effects of non-compliance and help improve our compliance numbers. That truly has helped. As we speak today, for 2025, our average compliance rate is actually 85%. So yes, there's still 15% that we need to deal with, that we need to negotiate with, that we need to go to the courts to help us ensure that those who are not paying, after all engagements have failed, we use that power that we do have to enforce what the law requires of us and to protect the worker, because our core job is to protect you, the worker, and to ensure that your contributions are being recorded, your contributions are being used right and invested right. What does the future look for the scheme? We need to expand coverage quickly to the informal sector. That's where the numbers truly are. We definitely need to improve on our investment returns. And we need to enhance our governance framework, even as we evolve and improve on our practices and our ways of work. And I'm sure that as we get into the conversation subsequently, some questions will come up, clarities will be provided on some of these matters. What are we doing as SNIT to improve on the scheme immediately? One, we're improving on accessibility, and that's why today we are leveraging on banks through our co-location strategy. We've deployed 25 co-location points with banks. The plan really this year is to do about 50 co-location points, just to make it easier for you to engage us and have our services available to you. We've enhanced our digital channels. We are improving on how attractive the scheme is. Awareness like this, active engagements like this will also help. And we are also making the scheme very agile and responsive to the changing needs of the Ghanaian worker. Today, a lot of people work digitally, and we need to mimic people's lifestyle to make it easier for people to interact with us. When you pick your phone in the morning and you are checking your WhatsApp, you can also flip to the SNIT app and check your records, make sure that your nominees are fully updated. That way, you are becoming a partner on a collaborative journey of improving the scheme and for us to protect you and offer the best of services to you. I will be on standby for questions that will come up as well. Gloria, I know my time is up, and I'll pick any questions that come up in the Q&A sessions. Thank you, and God bless.
Sure. Thank you very much. Indeed, we need to make the informal sector attractive, to rope in, because in Ghana, roughly about 60% of workers are within the informal sector. So I love that point you brought on board, and we look forward to finding innovative ways to bring the informal sector, on board to be able to contribute and benefit from the scheme. Bless, if you can hear me, over to you. We can take the polls and then we zoom in into the panel discussion. Mr. Biney, thank you so much. And Mr. Biney will be with us. So if you have questions, type them in the chat box, or when there's time for Q&A, you can feel free to raise your questions to him. Thank you.
Thank you, Gloria.
Thank you so much. Once again, Mr. Biney, that was power-packed, I should say. So much information shared, and that set a good tone for further discussion during the panel session. Okay, so we'll take the poll on most of the issues or areas that Mr. Biney raised. So if my technical team can pull up the poll for participants to vote on. All right, so the first question is, if retirement started today, how prepared would you feel? Are you going to be very prepared, somewhat prepared, not prepared, and then you don't want to even think about it? Please select as appropriate. So if retirement started today, how prepared are you? Then to the next question, how often do you check your pension statement? Again, Mr. Biney mentioned that this should be something that we should check on a regular basis. Do you occasionally check your pension statement? Or you never do? So how often do you do that? Monthly, occasionally, rarely, or you never do? And to the next question, how confident are you in Ghana's pension system? On a scale of 1 to 5, how confident are you in Ghana's pension system? Last but not least, which of these should be the top priority for Ghana's social security system today? Please select up to 2. Which of these should be the top priority for Ghana's social security system today? Do you think coverage should be expanded, probably to include more of individuals in the informal sector? Should there be some financial sustainability? Should there be improvements in administration? Or should there be more inclusion of digitalization in pension management? And when it comes to governance, do you think there should be a more transparent governance so far as pension management is concerned? Our last question. So okay, we have a few more. So for SMEs in the audience, I would want to find out what actually is the constraint when it comes to your ability to comply. Is it about the cash flow timing? Is it about the lack of HR capacity? Please select as appropriate. And do you think the current employer or employee contribution split is fair and sustainable, or you feel it's too heavy on employers or employees? Okay, finally, after today's session, how likely are you to take action on your pension? So we are waiting for panelists to vote before we end the poll. We want at least half of the participants to vote on these areas before we end the poll. So I'll encourage as many people as possible to vote. Okay, result to be up shortly. Wow. So this is how we voted. So if retirement started today, how prepared would you feel? A lot of people said they are somehow prepared. Oh, we need to do more. And the next question, how often do you check your pension statement? And most people are also saying that they occasionally check it. I think we need to do more on this as well. Let's move to the third one. And how confident are you in Ghana's pension system? Okay, 52% are in the middle. So which of these should be the top priority for Ghana's social security system today? People are more concerned about the financial stability. That is SNIT, the pension trustees being able to pay their SNIT when they are due, pay their pensions when they are due. And then for SMEs that are not able to meet their compliance obligations, they are saying that most of the times they are cash flow issues. And also they have limited awareness of these compliance obligations. And on the question about whether you think the current employer-employee contribution split is fair, most people are saying that it's fair and it's sustainable. And we have a few people who are saying that the split between employers and employees are too heavy. So the last question, people are saying that they are very likely to take action on their pensions after today's session. Thank you so much. We move on to the next session, which is on a presentation on the subject matter. So this will be taken by Henry Corte. Henry Corte is a senior manager here in Tax and Regulatory Unit of Deloitte, Ghana. He is in charge of payroll, international tax advisory, mobility tax, and then he conducts also health checks as well as also gives mobility advisory. He is a member of ICAG and also an associate of CIT. He holds a Bachelor of Commerce in Accounting from the University of Cape Coast, and he also holds a Bachelor of Laws degree. So Henry, I would invite you to take the floor to give us a short presentation on the subject matter. Thank you.
Thank you, Bless, and good morning to everyone on this call. Thank you also to the Director General. The Director General basically did a lot on our presentation today, but pension remains one of the topical issues for all employees and employers all over the world. Looking into the future, individuals, in fact, all of us are interested in how we would go on retirement, basically, how we would support ourselves when we go on retirement or when we exit the workforce. Our presentation today is basically to remind ourselves of the regulatory framework as well as compliance and how it would help us achieve this objective. So our topic once again is securing tomorrow today, unpacking Ghana's social security and compliance landscape. We would look at the structure of Ghana's three-tier pension scheme, a few cross-border and expatriate considerations, compliance obligations for employers and employees, as well as some challenges and reform policies that have been put in place. For purpose of this presentation, the relevant legal framework that we considered include the National Pensions Act, that's the primary law, the regulations, the basic national security, social security regulations, as well as the occupational and pension scheme regulations. We also considered guidelines from MPRA for the registration of expatriate workers, as well as directives and press releases from MPRA and SNET. The DJ gave us a very good overview, but just to highlight once again that for purposes of our three-tier scheme that Ghana practices, all workers in Ghana are required to contribute to the scheme. To the extent that you source your income from Ghana, whether from the formal sector or informal sector, there is a requirement for a contribution to the scheme to protect or to secure our future when we exit the workforce. Workers being required is enhanced by the mandatory contributions on or from the employer angle, right? We have a three-tier scheme. The tier one basically managed by Social Security and National Insurance Trust, basically referred to as the trust. We have tier two that is managed by the approved trustees, as well as tier three that is managed by, that is privately managed occupational defined contribution scheme. The employer is required to contribute 13% of an employee's basic salary, while the employee contributes 5.5% of his basic salary, summing up to 18.5% of basic salary towards pension in Ghana. This is the mandatory aspect of the scheme. In that pool, or upon pooling, the employer is required to remit 13.5% of the pool to SNETs and 5% to the trustees, right? There is, however, a maximum insurable earning, which year on year, the trust advises the public on when it is revised. Currently, the maximum insurable earning for which indicates how much the extent to which SNIT is able to manage the funds of an individual is currently at 69,000 Ghana cedis, which means that a contribution, the highest contribution that would be sent for purposes of SNIT currently on an individual is 99,315. The key institutions with respect to administering the three-tier pension scheme comprises the National Pensions Regulatory Authority, which we are all aware are the primary regulators, the trusts, the pension fund managers, who are basically responsible for tier 2 or who manage tier 2 and tier 3 pensions, as well as the custodians or the trustees of the assets. These custodians are responsible basically for the safekeeping of the funds being managed by the pension fund managers or the approved trustees. With a three-tier scheme, I think I left out the tier 3. The tier 3 is the voluntary scheme. For purposes of taxation, we as individuals have an extent of 36% to enjoy a relief, right? 35% to enjoy a relief. But SNIT's amount or the mandatory scheme contributes to 18.5, meaning that we have a difference to be able to take advantage of and use to plan towards our future, right? So that difference is more of a voluntary scheme that employers could contribute to take advantage of the tax. Why do pensions matter? Why do pensions matter? We have spoken a lot about it, but just to highlight that it protects the retirement income and prevents old age poverty. We don't want to be poor when we get to old age, when we retire. We want to at least have a reliable source of income. So we would need to consider being part or participating in this pension scheme. The pension scheme also reduces inequality and financial vulnerability by pooling risks across populations. We understand that whenever we invest, there is more of risk pooling. So contribution to the scheme is more of an investment, as the Director General mentioned, and therefore it means or it enhances the pooling of risk across populations. It promotes social stability and fiscal planning by clarifying future liabilities and reducing ad hoc dependence on emergency welfare and politically driven payouts, helping governments and employers plan long-term finances. And also, it helps in mobilizing long-term domestic savings, supporting capital formation, and deeper, more stable financial markets. Our contributions are invested by SNITs, and this investment helps SNITs to help in the mobilization of our economy of domestic savings and supporting these capital markets within the country to make it more stable. We have earlier mentioned on the maximum insurable earnings, which means that at a point in time, an employee whose basic salary exceeds 69,000 currently, right, would be limited to the extent of contribution to be made to SNIT. The question comes that what happens to the remaining? What happens to the the difference. 5% is required to be contributed to the tier 2, the privately managed schemes, the approved trustees. So while SNIT is restricting or limiting the insurable earning to 69,000, what happens in case an employee earns 80,000 basic salary? There are two schools of thought. A school of thought is to the effect that, yes, SNIT can only do 13.5, and that's what I'll contribute. 5% of my basic salary is required to go to the approved trustees. I have complied. There's a second school of thought which says that to the extent that you do not contribute 13.5 on the full basic salary of 80,000, as well as 5% on the 80,000 to the approved trustees, you have not fully complied, because the requirement is towards a contribution of 18.5%. So I believe in the course of the discussion, these are some of the questions that employers always bring up, and I would be happy we juggle more on that. How are our pension contributions utilized? Right, that's what we want to look at this stage. The payment of pension benefits are, the Director General once again gave us a detailed insight on how the payments are made, or when the payments are made, in the form of retirement benefits, where upon exiting the workforce, you have an annuity, more like it's a periodic sum that is paid to us or paid to you, as well as invalidity benefits. Should the worst happen and for some reasons you are unable to continue working, you would be entitled to this benefit, as well as survivors' pension for dependents. Touch wood, should you during your working life die, your survivors have something to fall on for purposes of their day-to-day running of themselves. On investment of the funds, we are told that, or the law mandates the investments to be done at a maximum limit for government securities to an extent of 75%, meaning that the scheme contribution cannot be invested into government securities beyond 75%. For corporate debt and equities, for money market instruments, for ordinary shares, and for open and closed-end funds, the respective percentages are, as indicated, 30, 35, 10, and 15, respectively, right? Beyond which we are not, the fund managers cannot invest. And also, whilst the trust takes contributions and makes payments, right, upon when we make a claim, or the approved trustees also do same, there is an administrative cost, right, that will be used to manage the funds, right? So that aspect is also very important for us to note. We have mentioned on the tier 1 benefits, and largely we are always interested in the calculation of these benefits. How would I be able to calculate my claim when I exit the workforce? The calculation largely of the tier 1 benefits is based on 3 main parameters: your retirement age, the total number of months you have made contributions, and the average of the 3 best years' annual salaries. The actuaries will do this working, and largely this forms the basis for your periodic payments or your monthly payments that is made to you. For tier 2 and tier 3, they are basically lump sum payments, which is made upon retirement. You have this lump sum that I know mostly we tend to invest it, and people say it's a new chapter of our lives when we get there, and we invest it in whichever transactions or whichever activity we want to undertake. Let's look at some few cross-border and expatriate considerations. Expatriate workers are required by law to contribute to SNIT. In our field of work, we have seen this a lot. A lot of times come up. Are expatriate workers mandated to contribute? Yes, the law mandates expatriate workers to contribute. And upon emigration, their monies would be given back to them, right? However, expatriate workers who apply, who meets the conditions, right, and apply for exemption from contributing may be granted this exemption from contributing to the scheme, right, for purposes of being members of the scheme. I know a lot of questions may come on this, but when we get into the panel discussions, we will pick them up. These are sample exemption letters that are usually granted by SNIT in respect of Tier 1 and by the NPRA in respect of Tier 2. These are the requirements upon emigration. These are the requirements which you can follow to ensure that your claims are paid. Compliance obligations. We all have obligations to ensure that we contribute as expected or as required by law to the scheme. The employer has obligations which we have spoken on a lot, but to remind ourselves on the need to register and enroll employees, the need to maintain records and submit accurate reports on payroll where need be, the need to deduct and remit contributions timely. By the 14th of the ensuing month, employers are required to, as it were, submit and make payments for pensions for their individual employees. And the onus is on the employer to ensure this is done. We should also, or the employer is also required to cooperate with the supervision team, basically from NPRA and SNIT, whenever they come for supervisions, inspections, and all that, where errors need to be corrected, where interest, payments, penalties, and all that, the employer should ensure that same is done. The employee also has an obligation. The employee is mandated to provide accurate registration information to the authority. You cannot be 30 years old and disclose to SNIT you are 20 years old. We all know what will happen when you get there. Keep and preserve records. It's very important that as employees, we retain pay slips and contribution receipts, right? We retain, or if we have an exemption, we should ensure that those copies are also maintained. If there is any change in nominees, as the DJ mentioned, we need to notify the authorities immediately and promptly and ensure same is done, because we do not know tomorrow. There are a number of challenges that we have spoken on, the earlier speakers have spoken on, and key policy reforms that we believe in the panel discussions the team would speak on, largely the shift to risk-based supervision, where the focus now is on risk. Which areas, which employer organizations are more riskier, and the focus is on those employers to ensure that the retirement incomes of their employees are secured. For purposes of securing the retirement incomes as well, the authority introduced an enhanced governance and fit and proper requirements, right, to ensure that the trustees, the directors, significant shareholders, and other key players, right, are up and running in terms of they are fit and proper for purposes of the activity that they are leading in pursuit of ensuring security of retirement incomes. There are other reforms that are being undertaken, which I believe will come up strongly. I know my time is up, but thank you so much for listening. If you have questions, I would be part of the panelists and I'll be happy to provide responses to. Thank you, team. And at this time, I'll yield to Bless if you can hear me.
Yes, I can. Thank you so much, Henry, for yet another round of detailed information shared. And to the audience, I would want to promise you that a lot more of this will be unpacked during the panel discussion. We urge you all to put your questions in the comment box, that's the Q&A box, as much as possible, or note them down as the discussion progresses. We would do well to respond to all questions within the time limit. So I'll move on to introduce our panelists for today's discussion. I mentioned earlier that we are joined today by some distinguished panelists from the regulator NPRA, from SNIT, from Petra, and then 2 senior managers from Deloitte. So I'm glad to announce that Mr. Ni Amu Otu from NPRA is joining us for this discussion. If we can have his picture up. Otherwise, I'll continue with the introduction. So he is an experienced pensions regulator professional with over a decade of expertise in compliance, enforcement, and policy development within the pension industry. So currently, he's the head of monitoring at NPRA. So head of standards and enforcement unit at the NPRA. So he facilitates the creation and then the implementation of administrative guidelines, coordinates enforcement activities, and provides industry advice on regulatory matters. He has strong background in finance and actuarial science, so he holds a BSc in statistics and actuarial science, and also an MSc in industrial finance and investment. So in addition to his professional duties, he is also a faculty member at the National Pensions College. We move on to introducing our panelists coming from SNIT. So she is in the person of Cynthia Na. So she is currently the Public Education Manager at the Public Affairs Department of SNIT. She has a diploma in communication from GIJ and also have bachelor's and master's degrees in marketing. She is an associate member of the Chartered Institute of Marketing UK. She has over 27 years of experience at SNIT. Wow. In her line of work, she has demonstrated leadership, delivered measurable value, and contributed significantly to stakeholder engagement and then operational excellence. Then, from Petra, our panelist is Kalina Nyame from Petra. She is an experienced relationship manager with over 8 years experience in this sector. I'm sure those of us who have our accounts at Petra would have encountered her on numerous occasions. She's such a sweet soul, and she's always ready to assist with all our queries. So since Kalina also has her career, most of her career started at Petra, and she has successfully worked with individuals and then organizations to build a strong partnership and provided tailored solutions and delivered exceptional client service at Petra. From Deloitte, we have 2 representatives, like I said, Harry Corte, who just delivered the presentation, and Betty Autry. So Betty is also a senior manager with tax and then the regulatory units here. She has more than 10 years of professional experience in payroll management, pensions compliance, mobility tax, tax health checks, and mobility advisory. She's also a member of ICAG and an associate of the Chartered Institute of Taxation Ghana. She holds a bachelor's degree in accounting and finance. So we are going to zoom straight into the panel discussion. So if I can have my panelists on mute and turn on their videos, that'll be great. Okay. Okay, I will start with Niam because you happen to lead the monetary unit at NPRA. NPRA also happens to be the regulator when it comes to pensions. So I would want to know, in your work, how effective is the enforcement of the mandatory pension contributions in Ghana that were earlier on presented?
Okay. Good morning, participants. Good morning, panelists, and the keynote speaker, the DG of SNET. Thank you for this opportunity. Yeah, so enforcement in terms of pensions, employer compliance for Tier 2, we have observed that the percentage of compliance is um, quite lower than what SNET has. Even SNET is trying to achieve more in terms of compliance, in terms of entities that have been registered against what those that are complying with their pension contribution payments. And I happen to have headed a TEMA office for the authority. And when we started the employer compliance activities, or called the pension audits, basically mimicking what SNET does for Tier 2. And what we chiefly found was that SMEs, schools, private schools, private hospitals, especially the ones that have just come on board, then security companies, and then HR outsourcing firms tended to be the entities that we found within the non-compliance pool. And the issues we found around there had to do with basically structure, their payroll structure, compliance requirements, and also they had issues with turnaround of staff. So there's high attrition within these areas. We've also implemented prosecutions to try to enhance that, but chiefly we attempt to use administrative means because our goal is not to jail the employer. Our goal is to recover funds that are due the contributors. Thank you. Hello.
Bless, you need
Yes,
to
sorry, I was
yeah.
putting on mute. Yes. All right. So I would want us to spend some time on the informal sector. So according to the Director General, he mentioned that only about 51,000 individuals are enrolled from the informal sector. So with this data, what more do you think can be done to improve compliance, especially among the SMEs and then the informal sector?
Well, with the informal sector, I think the discussion is not so much of compliance. It's more of increasing coverage and participation because it's voluntary. Even for Tier 1 and Tier 2, where they can contribute, it's to be done voluntarily. What we've observed is that flexibility in contribution payment is very key. And so individuals, persons, workers in the informal sector that tend to have variable income might struggle to meet the requirements for the mandatory schemes. And so the option they have, like DG mentioned, is the personal pension scheme. And you realize that when your colleague was doing presentation, Henry, on he spoke about the MPRA's planned reforms. One of the things that we are looking at is to implement what we call a micro pension policy. And that policy, what that policy is doing is to enhance the flexibility in participation in pensions. Then again, we've also taken a view that the informal sector is not one homogeneous group, and we've seen that there are various subgroups within. And so there are those whose salary income is regular, is structured, and it's even easy for them to participate in the tier 1 and tier 2. But those whose income is variable and is widespread, the option we are giving them is to contribute to what we call the micro pension scheme. And on top of that, we are looking to implement a system to facilitate the process of enrolling, basically to reduce the cost for the service providers, that is the trustees who would be now registering schemes under the micro pension policy to be able to participate in enrolling informal sector workers. Another key point is that informal sector pensions thrives on engagement. And so we are looking to enhance engagement with informal sector workers, conducting more outreaches. Of course, we are not going to do it on our own. We'll partner with SNET, we'll partner with the trustees to be able to bring on board more of the informal sector. We are looking at introducing other ingenious ways where we actually go to the markets and interact with the informal sector workers, because what we see is that because you're dealing with individuals, there has to be a way to sort of sweeten the deal, improve the interaction so that they feel a part of their pension management, and they also have a sense of saving towards the future. Thank you.
All right, thank you too. And then it's good to know that there are so many policy initiatives and so many things being done to bring in this large population so they can also have a safe and a secure future for themselves. So I'll move on to Cynthia. So Cynthia, we've seen that over the past few years, we've seen a lot of Ghanaians, especially the youth, relocating abroad in search of greener pastures. So we would like to know how SLIT is adapting to this changing workforce trends in the instance where a Ghanaian worker who has recently repatriated out of the country keeps contributing to the scheme whilst outside, considering that he or she has contributed for less than 15 years. So how is SLIT going to treat this?
Thank you very much, Bless. And so when it comes to contribution payment, you are supposed to end whatever you are contributing on here in Ghana. So once you leave the shores of the country, you cannot continue with your contributions, because whatever you are contributing on, you should be earning that money here in Ghana. So the moment the person relocates, you cannot continue with your contributions. And again, as an institution, we are focusing heavily on the informal sector because we believe that the informal sector represents the largest portion of Ghana's labor force. And as a result, we are working diligently to encourage individuals such as the Okada riders, online business owners, and other self-employed workers to register and contribute under the scheme. This will help extend social security coverage to more people and to ensure that they benefit from the protection and the support that the scheme provides. We've also moved to a full automation and digital platforms, and we now have our virtual branch, which runs on 24/7 so that our members can have easy access to us. We also have we've got into a collaboration with GRE and Registrar General, so we can confirm the number of workers and the salaries submitted to GRE against what the employer submits to us. And again, anytime a new company is registered, we get notification from GRE, and quickly we follow up to register the establishment and the workers under the establishment. And when we get talking about the education, we have now extended Social Security education to both the basic and tertiary levels of education. This ensures that the students gain an understanding of Social Security before they enter into the job market, and helping them appreciate its importance and benefit from an early stage. Thank you, Bless.
Thank you so much. So going back to what you mentioned earlier, that once you leave the shores of Ghana, and then once you stop earning anything from Ghana, then your social security contribution should necessarily stop. So for someone who hasn't met the 15 years threshold, do I qualify to claim what I have contributed so far? And then do I have the option of freezing it and then coming back to it when there's a need for me to return to Ghana?
Yes, you can come back and continue with your contributions when you start earning your benefit, your income here in Ghana. But when you are unable to continue with your contributions, when you get to age 60, you put in the claim, we process and we pay you. Other than that, you cannot have access to your benefits, because per the pension law, you have to be able to make at least a minimum of 180 months, and your ages should fall between the ages of 55 through to 59 in 11 months, that you are not 60 years, and you can have access to your benefits if you've made a minimum 180 months. And you enjoy what we call reduced pension. But if you want to enjoy full pension, you need to make at least a minimum of 180 months, and your age should be 60 years. Then you can enjoy full pension. So if the member has relocated and the member has not been able to make a minimum of 180, when the member gets to age 60, the member can put in the claim and enjoy what we called old age lump sum. Old age lump sum is when you've not been able to make the minimum 180 months, yet you are 60 years. So all your contributions that you've given to SNET, plus the accrued interest, everything will be paid to you as one-time lump sum. Thank you, Bless.
Good. Thank you. Great. So then on the flip side, we've seen that because of remote working, some Ghanaians are currently sitting in Ghana and then working for entities that are abroad. So in that instance, can a Ghanaian still contribute to SNIT or maybe pensions in Ghana?
Yes, so we classify such group as self-employed contributors. So for them, they have to declare a salary to us. And out of whatever salary they declare to us, they are supposed to contribute 13.5 of their declared salary to SNET, of which SNET is going to pay 2.5 to NHIS so that they can enjoy free medical care from NHIS. Then the 11% is retained with the trust. The trust works with the 11% till they are 60 years, then we pay their benefits. So once the person is working here, earning whatever income here, the person is self-employed, the person can contribute as a self-employed contributor.
Okay, thank you. So I would ask that you check your camera and then return to video if you can.
Yeah, I think.
Okay, so whilst you do that, I'll go back to Niamu. Are there currently any international treaties or agreements in place between Ghana and other countries, especially African countries, when it comes to pensions? You know, for taxes, we have double tax agreement, double tax treaties with other countries, which benefits both citizens of both countries do enjoy. Do we have such when it comes to pensions?
No, unfortunately, we don't have any established treaties between Ghana and any other country, particularly because our system is unique in a certain sense. But then, at least it's been made clear to you that once you can demonstrate that you are contributing to a pension scheme, a similar pension scheme in your home country, you can apply for exemptions from participation. That is for expatriate workers. I believe the question is with respect to persons who are contributing or come from another country and are working here, to be able to see whether you can transpose what is happening there here. There's no such treaty, but the exemptions clause applies to such persons. Thank you.
Okay, thank you. So Cynthia Ella mentioned that if you are in
Bless,
Ghana working
just
with,
Bless,
okay.
can you hear me?
Yes, I can hear you.
Yeah,
Mr.
Nee is very
Baini.
right. Nee is very right. There's no treaty like that. But let me
Yes, you can
flag,
come
however,
in.
that there are some current conversations around treaties that would enable people move across various jurisdictions. For instance, there's one currently ongoing between us and CNPS Cote d'Ivoire that we need to agree at the country end because these are international agreements and will require national support. So there are some conversations to address matters like that. But as we speak today, Nee is absolutely right. Those treaties do not exist. But in future, it's likely that we'll start having set treaties in place. Thanks.
Okay, good that such considerations are on the table. Okay, so me again, I'm on your case today, just indulge me. So for Cynthia mentioned that for workers that work remotely for non-resident entities, there are such plans in place for them to contribute to the Ghanaian pension schemes. So I want to also understand for contract staff workers, the freelancers, and then the gig economy, is NPRA accommodating these people? Do they have plans for them, or are there already plans in place for them to also contribute to the pension scheme in Ghana?
Okay, so well, I would like us to separate contract staff from the other class of workers because contract staff, is, in a certain sense, are temporary workers. And if you look at the definition of salary, it includes the kind of salary that a contract staff would be receiving. So the expectation is that once you're a contract staff, there should be such deductions that are paid to tier one and tier two. But for the other class of workers that you mentioned, like Cynthia mentioned, we would normally classify those as self-employed persons, and they have the option of voluntarily contributing to tier one and or tier two, sorry, and tier two, or they can do a personal pension scheme if they so please. So the three tiers actually open to them, and because of the nature of their work, they are allowed to participate into it voluntarily. Thank you.
All right, thank you. Betty, you assist a lot of clients with their pension compliance work. So from practice, what are some of the challenges that you think clients and then consultants face in the day-to-day engagement with the pension authorities? And then how can they proactively address those challenges? I mean, the regulators, NPRA, SNIT, and then Petra, for instance.
Okay, right. Yeah, thank you, Les. So yes, we've been doing this for a while. First and foremost, I think the most recurring challenge we've had in the past has to do with allocation of um, pension contributions, and it's mostly tier two and then the tier three, right? SNETs, from experience, have been able to allocate, and it shows when you generate your contribution statements if you do check it regularly. But tier two and then tier three fund managers, some of them where you run validation of the contribution statements on a monthly basis, and payments are made by the employer. But an employee would go and check the statements, I think, a few months along the line and realize no allocation has been done to them. So then a whole query is raised as to why the employer is not paying tier two for them when in actual sense the employer is doing that. And so this is a key challenge for us because then the challenges has Deloitte or other consultants done their work ensuring the allocations have been done. And so I think we would want to appeal to the tier two and then the tier three private fund managers to ensure that the system that they have put in place in the sense that they request us to run a validation, as I said, of the contributions that are made for each employee. And so once the validation is done, some of them issue a code, and that code is using payments to flat, then the allocation is done using the code so that they know this payment is coming from this entity, and so we are allocating it to the employees of this entity. And so we would request them to stick to their recommendation or their outline that they have requested of us, and then ensure that once payment is done, they follow up and allocate the contributions to the employees, so that when the employees generate their contribution statements, they are able to see the contributions that have been paid on their behalf. Additionally, I think for some fund managers as well, there are some challenges with onboarding new employees. You are supposed to complete and you provide a few details, including next of kin. Let me put it that way: beneficiaries, yes, and next of kin. So once you provide that information, then they input that in their system, and then they are given an employee ID or a contribution ID. And so that is used to enroll them onto the respective fund managers. And so if there are delays in onboarding the employees, then it delays the contributions that are made. And there is almost always a lag when it comes to that. And so we are putting it to them so that they would increase their internal effort in ensuring enrollments are done on time and accurately. Yeah.
Okay, thank you. The last time we had a discussion, you mentioned that salary hike errors do occur, and that prevents monthly and then timely validation of pension returns. Can you touch on that as well?
Yeah. Yes, and I also believe our Senate rep would add to that. But I think over the last year or so, Senate came with a new directive that where the validation should be directed to them. And this is a measure to ensure the salary of employees are not hiked unnecessarily. Let me put it that way. So, and during the presentation, Henry mentioned that in determining your benefits, they consider your three. And so, in order to avoid people actually inflating their basic salaries, probably towards retirement, they put these measures in place. And so every month, if there's a salary hike, then the validation has to go to SNES, whereas we could have done it through the portal individually or on our own time. And so there's that challenge routing everything through SNES because there are a lot of employers, and so there's some kind of gap delay in getting the validations done on time, and ensure payments are also done before the 14th. And it's difficult, especially for foreign earners, let's say the expatriates whose current salary or earnings are mostly foreign denominated. And so every month there would be a hike kind of based on the exchange rate. And so it's very difficult to get that done in time. And so we would also entreat them to also find some way around it for us as consultants to make the work easier for us and when we meet the deadlines. Yeah.
Sorry. So I would ask Cynthia to respond to this query on the salary hikes. Then after, I will take comments from Kalina about the general issues that were highlighted by Betty in her earlier presentation.
Okay, thank you very much, Bless. So to prevent outrageous salaries increments being reported, our system has a limit to which salaries can be increased using the annual indexation rate plus 5%. So if an employer submits salaries above that threshold, the system automatically flags it. And then the employer has to submit an evidence to the enforcement branch for investigation. That's the reason why we don't give employers the access to make these corrections on the portal and the mobile app. Because we know that employer members are aware that pensions are calculated based on their best 3 years. And so when you realize that a member is just about retiring, and then all of a sudden the salary shoots up to a certain level, Of course, we need to investigate. We need to have evidence why salary shoot from a certain level to another level before we assess and accept that it goes through the system. Thank you very much, Bliss.
Okay, thank you, Kalina. Can we get your response on how Petra is working to resolve the queries that were mentioned by Betty?
Thank you very much, Bless. Good morning, everybody. So when it comes to contributions at Petra, what Betty mentioned, an employer is required to first visit the portal to validate a schedule. So after you validate your schedule, you download a payment advice. So with the payment advice, you move to the bank to make your payment. So when the payments are made using the SI number, the schedule ID number, which is shared with you after validation, we allocate your funds, we match to the payment, and then we credit the employee's account within 48 hours. But sometimes there could be some delays in matching employee contributions. When the payments are made without a respective schedule ID, there can be some sort of mismatch in crediting the contributor's account. And this can lead to these delays Betty mentioned. And as well as sometimes when the bank is unable to credit the account, they're unable to know what the money is for, there can be some delays in crediting contributors' account. In such situations, immediately the relationship manager are notified, or we are called on, or an email is shared. Contributors' accounts are credited immediately. Thank you.
Thank you, Kalina. Now, to Naomi, is there any provision in the law that addresses the excess tier one contributions made by contributors whose earnings exceed the maximum insurable amount that has been set by SNIT?
Okay, so no, there's no express provision. What I mean by express is there's nothing written in black and white that addresses it. But how we've dealt with it is to issue directives to employers, to trustees that make this inquiry, that where there's an excess, because the deduction was made within the context of mandatory contributions, whatever is considered as an excess or whatever the resulting amount is that cannot be paid to the SNIT scheme by virtue of the cap should be remitted to the Tier 2 scheme, in addition to the 5% that is already being contributed to the scheme. Also to indicate that the authority is working on amendment of the Act and would include an express directive to address this particular concern. Thank you.
Thank you. Mr. Baini, I don't know if you are still on the call. If you are, I would want you to take this for me. Otherwise, Catherine would. Okay. Okay, so Catherine, so there's a genuine concern around the sustainability of Ghana's pension scheme. So one would ask, how sustainable is Ghana's pension scheme? So given the demographic and then the economic realities that we are facing or have faced in the past. So are the current contribution rates sufficient to support the future retirees like me? Hello, can I be heard?
Yes,
Yes,
loud and clear.
Bless. You can be heard.
Oh, okay. So Catherine, can you take this for us? Let me go through again. So I mentioned that there's a genuine concern about the sustainability of Ghana's pension scheme. So one would ask how sustainable Ghana's pension scheme is, given the economic realities that we've faced in the recent past. So are we saying that there's enough funds or enough money to support future retirees like myself? Okay, we'll skip this for now. I'm sure she's having challenges with joining us. Yeah, okay, that's fine. Okay, Niam, I don't know if you have anything to share on this question that I have asked.
Sustainability.
Yes, about the
Um,
sustainability.
okay, so typically when we talk about sustainability of pensions, we would normally be looking at typically we're looking at the tier one scheme, because the scheme is designed on the basis of its ability to create assets, and not just any assets, income generating assets, to support its inflows monthly to pay pension benefits. The hope is that there's excess of that liquidity to create more assets. The second basis for sustainability would be the number of workers that are contributing to the scheme, because there's even a ratio that compares the number of active workers to a pensioner. As it has been explained by DG, the scheme is a solidarity scheme, and so it requires a pool of contributors to support those who have exited active contribution to the scheme. So when we talk about sustainability, yes, there's a lot of consideration going to the quality of investments that SNIT is doing. We've recently passed the investment guidelines, and also together with SNIT reviewed their investment policy statement that is looking forward to improve the kind of investments that they are doing, particularly focusing more on income generating assets. So invariably, on will I say, a periodic basis, upscaling or restructuring their investment portfolio. I'm sure we are all aware that SNIT has investments into a lot of real estates. They're also invested in a lot of entities through private placements. And SNIT is looking at how it would restructure these portfolios to ensure that it continues to grow, continues to support the obligations that they have. I'm sure we're also aware that SNIT conducts what we call an actual valuation. There was an excerpt of it that was misconstrued. That report is supposed to be an advisory report, and basically what it does, it arms SNIT with information to guide its future prospects in terms of investments, in terms of their obligations, in terms of how they deal with those obligations. So I would say that the pension scheme is sustainable, and we are always looking for ways to improve our position when it comes to sustainability. Thank you.
Good. Good to hear. So, Kalina, I would want you to take this from the trustees side. So, what roles do Tier 1 and then Tier 3 fund managers play in protecting contributors and then ensuring transparency within the pension industry? How safe are we with Tier 2, Tier 3 pension fund managers?
So when it comes to tier 2, tier 3, the tier 2, tier 3 is backed by the Pensions Act. So contributors are very safe when it comes to that. As rightly said, you contribute a 5% to the mandatory contribution and then the 16.5 to the voluntary contribution. The schemes are regulated and protected by the National Pensions Regulatory Authority, and they ensure that contributions are protected and contributors are safe when it comes to the monies they pay to us as trustees. So on a monthly basis, employers are being notified and ensure that they make their tier 2 and 3 payments on time. And any employer who delays in making payments, a 3% penalty is surcharged, and then the employer makes contribution accordingly. We've also ensured to make transparency available to our employers as well. We have our online portal available to contributors. The portal allows you to view your contributions, track your payments, and see how your contributions are going on a daily basis. So as contributors, we've made transparency available to you. You can go there and see how your funds are doing, and where there are gaps, you can notify your employer that you've not seen this monthly payment in your account. And then your employer can ensure that your funds and your account are credited accordingly. So what we've done is we've made transparency available to everybody. We've invested in transparency. We have USSD platforms available to contributors where they can view their contributions daily on this platform. Our online portal, our USSD platform, you can walk into our offices to view your contributions and track your contributions. Where you see lapses, you can fall on your employer and let your employer know that there are lapses in your contributions. And then your employer will do the right thing to ensure that we, the trustee at Spectra, can also credit your account accordingly. Thank you.
Okay, thank you. So, final question to you before we close this chapter on the protection of the contributions. So, what investment principles or guidelines are in place to ensure that trustees balance growth opportunities with proper risk management?
Sorry, is the question addressed to Kalina, right?
Yes, to Kalina.
Okay. Thank you very much. So pension fund management is guided by key investment principles. As mentioned, the regulator has given us areas to invest in. We have asset classes that we fall on to guide the investment principles we work with. And the main principle when it comes to pension funds is capital preservation and then long-term growth. So we make sure that the licensed trustees, the licensed fund managers we are working closest with diversify the investment portfolio across various approved asset classes. So they regularly monitor the market and then the investment performance and ensure that they minimize risks to the smallest possible. In essence, what we try to do is to achieve a steady growth without exposing contributors' retirement savings to unnecessary or excessive risk. Thank you.
Okay, so we are gradually getting to the end of this panel discussion, but I would want Betty to share with us some practical steps that employers and employees can take to maximize their retirement security.
Okay, hi, Bless. Apologies, I was looking for the microphone. Yes, let me start from the employee side. So, first, it would be to ensure contributions are being made with every type of employment. So, as the NPRA was said, contract staff, even temporary workers are all expected to take pension contributions seriously. So the mandate is on them to push their employers to contribute, because if you are only in the industry of the casual, you only tend to do casual work or temporary work. Before you realize, you would have done 20 years and wouldn't have any pension contribution to your name. And so what I would advise or recommend is to take any type of employment seriously and enforce on the employer to contribute on your behalf. And then I'll touch on the basic salary or cash allowance, basic salary and then cash allowance proportion, right? So if you are in talks for employment, right, or you are being brought on board to a new company, and within contract talks, stress on your basic salary amount being higher than your cash allowance. Because if the basic salary is higher, then your pension contributions would also be higher. If the basic salary is lower and your cash allowance is higher, you will be eating putting for your eggs within the current years. And at pension If you are being told your monthly pension is 1,000 cedis, you would be in shock because then you would think, oh, my earning was so high, but then you wouldn't realize it's because the bill was so low. And so the 18.5 of the very small base salary doesn't amount to a huge pension. And then lastly, we all know the Provident Fund. We all have room to contribute more. So if you wouldn't mind reducing your net pay, you can contribute more. But just ensure that you are within the system threshold in order to enjoy the tax relief on that. So we can all enroll onto the tier 3. For some entities, the employees contribute a portion and then the employer also adds up to it. And so you can make inquiries to your employer and check if there's the possibility for you to enroll on a tier 3 scheme. Like the previous presenters have said, it's voluntary, so it's not mandatory. And so you have to take the step and contribute to that. And there's the added advantage of you getting a tax relief in that the amount will be deducted from your income before the rest of it is subjected to tax. And so these are the recommendations that I would put to our participants notice of going forward.
Thank you, Betty, for the nuggets shared. So, Kalina, Meshin talked about investments. I would want you to just briefly touch on some biggest mistakes that you've seen people make when they are planning for their retirement, and then how you think they could avoid these mistakes.
Well, one of the biggest mistakes people make is waiting too long to start planning for retirement. Many individuals, they underestimate how much money they will need when they proceed on retirement. They fail to monitor their pension account regularly, or they do not take the time to understand how the pension scheme works. In some cases, people who are also contributing, they end up withdrawing their retirement savings prematurely when they are permitted. So at the end of the retirement age, their balances are reduced to nothing. And these mistakes can be avoided by starting retirement planning early. You need to review your financial goals regularly and take advantage of the pension education and retirement planning resources that is made available to you as an individual. Be joining educational sessions such as this and learning to understand what pensions and retirement is all about. In situations where you can make additional contributions or voluntary contributions where possible, I advise that you do so. This will also help you to build your retirement and ensure that at the end of your retirement age, you have something great to fall on. Thank you very much.
Thank you, Kalina. I'll take final messages from Nee and Cynthia on the subject matter. And Kalina, feel free to come in if you have anything more to share.
Okay, thank you very much, Bless. For our employers, I will advise that we try to register all our workers and pay the right amount of contributions for them. We should try to consolidate our workers' salary. There are times that we realize that when our members retire and they receive their monthly pension, they somehow get disappointed because they believe they were earning so much during the active working life. And to add on to the database that we have before us as an institution, we have about 1,000 plus of our members that are contributing to SNIT today. And this group claimed that their basic salary that they are receiving today is less than 2,000 Ghana cedis. Every month, this group of people contribute 220 Ghana cedis to SNIT. Should this group of people decide to retire today, SNIT is going to pay them 1,200 as a starting point of their pension. And so as an institution, we move further to check on the pay slips of these individuals and realize that some are taking home like 10,000 Ghana cedis. You dig further into the 10,000 cedis and you realize that about 8,000 cedis has been put into allowances, and 1,000 cedis or 2,000 cedis has been declared as basic salaries. Meanwhile, social securities are not deducted on allowances. Social securities are deducted on declared basic salary. And during the active working life, our employers are supposed to top our contributions by 13%, but the 13% will not be deducted from the worker's basic salary. So the worker contributes 5.5 of his basic salary, and the employer tops it up with 13%. But this 13% will not be deducted from the worker's basic salary. And so as members of the scheme, if we allow our employers to tickle us with allowances, and we shift everything into allowances, at the end of the day, when you retire, no employer is going to pay you allowances. You'll be stripped of these allowances and you'll be exposed with just the basic salary that you declare. So we have to lobby our employers, and employers have to consolidate our salaries so that they pay the right amount of contributions for us. Because if my salary is consolidated and I'm taking home 10,000 cedis, my employer is going to contribute 13% of the 10,000 cedis for me. But if everything has been shifted into allowances and 1,000 cedis has been declared as basic salary, of course, my employer will pay 13% of the 1,000 cedis. And we all know that 13% of 10,000 is not the same as 13% of 1,000 cedis. So we have to consolidate our salaries so that employers pay the right contributions for us. And again, employers are supposed to pay early to avoid penalty. For contributors, we advise that they utilize our digital platforms. We have the SNET mobile app where they can update every information about themselves with the exception of date of birth. You cannot update or change anything pertaining to your date of birth, because changing date of birth in SNET is a big deal because we make projections based on the date of birth that you give us. So if you want to change your date of birth, then you have to petition our Director General. You'll be called to come for an interview. And when you're coming for the interview, you have to come with ancient document that proves your correct date of birth. So assuming we have 1980 on our database as your date of birth, and you claim you were born in 2002, you have to come with date of birth that was produced in 1980. You can't come with a date of birth that was produced in 2002. So the date of birth or evidence of death, evidence of birth that you bring should be ancient documents to prove your correct date of birth. And again, on our digital platform, so the birth certificate, the birth certificate you submit should be produced. You should produce a birth certificate that was given to you during the time that you claim you were born. And when it comes to the update of nominees, with our virtual platforms, you can update your nominees. You can actually see the people that you have nominated, and it gives you the option to update this nomination forms. And it is your responsibility to be updating this form on our portal for us. So no need for you to walk into any SNET office to run this ad. And again, checking on your statement. You need to be checking on your statement as a contributor. It is your obligation to be checking on your statement and blow the whistle when you realize your employer fails to pay your contributions. Thank you very much.
Thank you so much. Thank you, Catherine. Niamu, in 2 minutes, can you please give our messages?
Okay. Basically, to back what Cynthia said, SNET, and it cuts across all pension schemes in terms of employees having personal responsibility for contributions, even in terms of the mandatory schemes where the employer facilitates the deduction and remittance. Checking your statements is very key. And also to show interest in matters of pension, participating in similar webinars. Those of us who are here should be advocates for participation in such webinars. I'm sure Deloitte and other parties will be conducting more and more of these because pension without even a basic income can be very troubling. I'm not in pension, but at least I know a few people, my parents included, that are in pension. And I know having a basic income makes a very big difference. And so I would advocate that those who are here become advocates for pensions. Thank you.
Thank you very
Thank
much.
you
So,
Okay, briefly.
my final words would be every employee should actively monitor their pension account. This is very, very key. At Petra, we've made all the available digital channels at your disposal. You have access to our members portal, and the URL is members.petraonline.com. Please, when you get there and you are new, kindly create an account. Each individual has a Petra ID that starts with HI. That is your HI number. Use that to log on to the portal. This online portal allows you to track your contributions and see how they are doing on a daily basis. One key thing I would like to say is kindly update your beneficiary information if you've not done so. You are permitted to update as many as you want. If you put in your mother today and tomorrow you give birth and you would like to change, the portal allows you to do that changes as well. Please ensure to update your information, track your contributions. We also have our USSD platform available. That is the *447 *70 hash. And same when you get there, please use your Petra ID to create an account if you are new there. The USSD platform also allows you to track your contribution, request for statements, update your employee information. Kindly keep tracking your contribution. Also, at Petra, we've made retirement something personal. So we've set up our advisory team. They ensure that they help you plan your financial goals. Each individual has their unique goals that they would like to achieve. We've made advisors available to you. They sit with you and they help you plan. You can reach out
Okay.
to us if you like an advisor to speak with you and help you plan
Okay.
your retirement.
All
Please
right,
keep track of
Kalina.
your contribution. Thank you very much.
Thank you too. Thank you to all our panelists. This had really truly been a power-packed session with many valuable takeaways and insights. I'll invite Henry later to give us his final messages on the subject matter that he presented on, but would want to move to the audience to take questions and then I see Genevieve Tachi's hand is up. So for all other persons who would want to contribute or ask questions, I would request that you raise your virtual hands and then your microphones would be unmuted. But let's take Genevieve Tachi's comments or questions. Genevieve, please unmute and ask your questions. Otherwise, I would start responding to the questions that we have in the Q&A box. I don't know if Mr. Bani has joined us. Has he returned? Has Mr. Bani returned?
Sure. I am back here.
Okay,
Bless.
welcome back.
Is there a specific question that I need to address myself?
Yes, there is one. If you can address this for us. So there's a question on the rising prices that reduce the purchasing power of pension benefits over time. So the question is, does the monthly cash benefits received by pensioners increase over time, especially in Ghana where inflation rates constantly fluctuate?
Yes, that's the purpose or the essence of the indexation that SNIC does on an annual basis. It's meant to cushion you against inflationary pressures and to make sure that the pensioner it's not worse off. This year, for instance, the indexation was done at 10%. At a time, the projected average inflation was expected to be somewhere between 5 to 6%. So that's what informed our decision. I must admit, however, that there's been hyperinflationary periods where we've struggled to match the inflation rate. So I think 2 years back, for instance, whilst indexation was at 25%, inflation at certain points in that year were in excess of 50%. So those one-off extraordinary situations can occur as well. What goes into the indexation, though, is to protect the purchasing power of the pensioner, but also ensure that you don't go overboard, because you also need to ensure that the scheme is sustainable into the future.
Okay, thank you. Is there any other hand up? Please unmute and ask your question.
Hello.
Yes, hello.
Yeah. Good afternoon, madam.
Yeah, good afternoon.
Yes, please. My question is on the maximum insurable amount. Probably Henry can help me on this, since he is a payroll and tax person. The 5.5 employee contribution is tax deductible. So assuming that my basic salary is more than 69,000. So will all the 5.5% be tax deductible, or it will be restricted to the 69,000? That is the first question that I want to ask. And then the second person, who is more than 45 years, who has never contributed to SNET. How do you treat such a person? Thank you very much.
Okay, Henry,
Hello.
would you like to take it for us? Yes, Henry.
Okay, my brother. So the 5.5% from the employee side is uncapped, right? That is uncapped. I think that's a direct response to your question. Your second question, Bless, I'm not sure I got the second question well. If you can repeat that, or Betty could take that.
Oh, yeah, please. The second question is, assuming you employ somebody who is more than 45 years old, who has never contributed to SNIT before, how do you treat such person? How do you treat
Okay, I
such person
think
in terms of
Cynthia.
tier 1 and tier 2?
Okay, Cynthia.
Okay,
Yeah,
so
please go ahead.
per the pension law, for you to join the first year scheme, which is being managed by SNET, one has to be between the ages of 15 years to 45 years. So if the person is over 45 years and has never contributed to the scheme before, cannot join SNET, but must join the tier 2 fund managers. So if you're over 45 years and you've never contributed to SNET before, you can't join SNET. You have to join the tier 2 fund managers.
So please, does it mean you contribute all the 18.5 to the tier 2?
Yes, please. Because for
Okay,
us,
thank
you will not be able to make up the minimum 180 months that will qualify you for a full pension. So you have to join tier 2 so that you enjoy a lump sum from them when you retire.
Sure. All right. Thank you very much.
Okay, so there's a question here too in the comment box for SNIT. So Cynthia, you can take this as well. So the question is, what happens to my SNIT contribution if along the line I change my pension scheme to CAP 30 or GUSS due to a new job?
Okay, so assuming, like he said, move to CAP 30. Yes, you can contribute under CAP 30 and still contribute under SNET. Besides, CAP 30 is non-contributory. So if you move to an institution whereby you fall under CAP 30, you can continue with your contributions with SNET. But when you are 55 or 60 years, you can come for your benefit from SNET. So you can contribute under both schemes. But when you qualify per your age, you can come and take your benefits based on the number of months that you've contributed with us.
Okay. I let Emmanuel's hand is up. So Emmanuel, if you can unmute, may
Yes.
ask the question. Because of
Okay.
time constraints, be the last person to ask your question. We'll move to take the last question from the Q&A box.
Okay.
We will
Yes.
subsequently collate the outstanding
Awesome.
questions and we would try as much as possible to respond to them. Thank you.
Oh, okay. Awesome.
Okay.
Thank you.
Thank you.
Good afternoon.
So Emmanuel, go ahead.
Emmanuel, I'm here. Okay, yes. So my
Yes.
first question will be to
Sorry,
Niamo.
is it Mr. Bini? Okay, Emmanuel, go
Emmanuel
ahead.
is here. Can I proceed, please?
No, Emmanuel, can I continue?
Bless, there are two
Okay,
Emmanuels
so
So there are
now.
two
So
Emmanuel. So Emmanuel means
okay,
okay,
yeah,
the
I'm
one
Emmanuel
on the floor
Mensah.
can go ahead.
Yeah,
Yes,
so
the
I'm
one on the
Emmanuel
floor can go ahead.
Mensah. Okay, so my first question is to Niamo. Before joining the pension space, I joined an advocacy team relating to pensions. And what we realize is that mostly private schools, even going to the schools to go and educate the teachers on the pension industry as a whole, being it SNET tier 2 and tier 3. The principals or the owners of the school did not even allow us to come. So, on the regulator aspect, I want to know what is being done when it comes to such institutions who are only contributing on the payment of SNET and not looking at the mandatory tier 2. So, I was in collaboration with the Association of Private School Teachers, and it's been over 2 years now. Nothing has been done to visit the schools to educate the teachers. So on the regulator side, please, I want to know if something is being done on such, employers who do not want to pay the tier 2. And secondly, to Cynthia, during your presentation, you mentioned that when you travel outside the country, you can't contribute to SNET. Okay, so I wanted you to help me strike the difference because if I travel outside the country and someone who is in Ghana and working remotely for a company outside the country, if I go to, let's say, South Africa to go and do my own business and I want to still contribute to SNET, let's say I'm a teacher and I've not contributed in 15 years. I travel doing my own business in South Africa and I still want to contribute to SNET. Honestly, I'm a Ghanaian. The door can't be shut on me like that when it comes to SNET. And yes, Petra, Access Pension, they will take the business and then take the contributions to the tier 3 by someone who wants to make up the 15 years and also, when retired and returned home, get something. I think SNET can do something. So I want to know on that front if SNET has any plans for individuals who are working in Ghana and contributing to SNET and have traveled outside the country doing their own business but still want to contribute to SNET. What are their plans and arrangements for them? Thank you.
Okay, I would want Mr. Bini to take this one, but before that, would want to get questions from the other Emmanuel.
Thank you very much. Just one simple question, I believe. Now, I encountered a situation where an employee proud to the employment was doing self-contribution to Tier 1. Now, he joins and first month of contribution in submitting to Senate portal, it was flagged and it could not be submitted. So I called an officer from Senate, and it was like once the person has already made a self-contribution for that particular month, an employer contribution cannot be submitted. So we eliminated the person before we could go through with the submissions. So my question is this true? And then secondly, what should an employer do in this case so that you protect yourself so as far as compliance to Tier 1 is concerned? Thank you.
Thank you too. I would ask Mr. Bini to take this for us. Otherwise, Cynthia, you can go ahead and then provide responses to the questions directed to SNIT.
Okay, so on our system, you have to either be registered as a formal worker or as an informal worker. Even though the scheme allows multiple channels of contributions, you can't contribute as a formal worker and at the same time as informal worker. When you do that, you are trying to buy pensions. But assuming that you work with Company A as a formal worker, and you also have a registered business in which you've recruited about 1 or 2 people that you are paying contributions for, that gives you the opportunity to top up with whatever contributions that your former institution is paying for you. But you can't contribute onto the scheme as a formal worker and as an informal worker at the same time. That is not allowed. Please, I hope I've answered your question.
I'm sure you have. Okay, so let's take a response from Ni.
Okay,
Or the question that
so
was directed to you. Yeah.
yeah, so the question, if Ima, I don't know, maybe he didn't join early on, but the first question that was asked about enforcement, I highlighted some class of employers and pointed out that yes, we are very aware that private schools, there's issues around their compliance and a significant number of complaints that come to us apart from our field on-site exercises we are conducting with employers highlight that the private schools seem to have an issue when it comes to compliance with Tier 2 mandatory pensions. And so, yes, of course, engagement is the first arm. The second arm will be to enforce compliance through the law. And so, yes, there are some administrative arrangements that are ongoing for those employers that we have identified, those private schools that we've identified, to get them to comply. And I must add that our field exercises are not purely a compliance exercise, it is blended with education. And so the employer is required to give us the opportunity to engage with staff of the employer. That is if it's a school, of course, the teachers. And so we schedule to engage with the teachers to explain what their rights and responsibilities are while speaking to the employer and enforcing compliance with the law. And I must add that it's not an easy task because the schools are all over the place, but it's something that we are actively working at. And also to highlight that, as I mentioned earlier, we are expanding into the other regions. So in terms of human resource, our human resource potential or capacity has been boosted at our regional offices. We are currently in 10 out of the 16 regions. And for each of those offices, we have a minimum of 5 compliance officers. And we are hoping to expand to about 10 in each region. Thank you.
Okay, thank you. And sincere apologies to our audience for the time overrun. We want to accommodate more questions as much as possible. So our webinar would officially end at 12:30. So I'll take a few more questions. I see 3 hands up, and then there's one more question in the comments box which hasn't been addressed. So I'll take these 4 and then we'll bring the session to a close. So the next question here is, what does the law require when an expatriate who previously left Ghana permanently and received an immigration benefit subsequently returns to Ghana and resumes employment? What does the law require when an expat who left Ghana permanently and received an immigration benefit subsequently returns to Ghana and resumes employment? Cynthia can take this, or Kalina, if you would want to speak on this as well.
Okay, so we always advise the expatriate not to claim or come for their benefits if they have plans of coming back to engage themselves in any business activity. Because once you put in your claim and we pay your benefits, you cannot come back and continue or come back and contribute under the scheme. So that is it for the expatriate. Once you take your benefits and you come back, no need for you to contribute to another scheme because we've already paid your benefits to you.
Okay, so Abdul, you can unmute and ask your question. All right. If he's not ready, I would ask
Hello,
from
sir.
Samson.
Bless.
Okay.
I'm ready. Please, my first question goes to Kalina. So, for example, I joined company A, and when I joined, the with their tier two pension was standard, but I don't like standard, and I've contributed about 2 years to standard, and um in my own view, I want to join Petra. So what happened to that money? What I've contributed earlier? Yes.
All
And
right.
my second question goes to Cynthia. We have one challenge that we are facing at our company. Um, about three workers, they're above the age of 45. They said because they are above the age of 45, you should be giving their salary fully to them. But I don't get it because I wanted to register them for the tier two, for the tier three, so that all their money will be going there. I want to know, are we wrong if we give all the money to them, or it is obligatory on us to pay the tier 10, all the 18.5 for them? Thank you very much.
So please, like you rightly said, you have to contribute tier two for them. You have to contribute tier two for them so that at least when they retire, they can get a lump sum. Because tier two is mandatory, just like the same way tier one is mandatory. So please register them under tier two and pay their contributions under tier two so that they can enjoy a lump sum when they retire. Thank you.
All right, thank you. So the law allows transfers within the schemes. So for instance, if you're with company A and then you are contributing to trustee A, and then you move to company B and it's with another trustee, the law permits you to transfer your funds from your previous trustee to your current trustee. So at Petra, if you want to move your funds from your previous trustee to us, you notify us and we'll give you the forms to complete. Per law, the transfers take 90 working days, and then your funds will be transferred currently, and then you can continue making contributions into your account.
Thank you very much.
Thank you.
We take the final question from Samson. Samson, please unmute and ask your question.
Thank you, Liz. And please, what does the law say about an employer committing both tier two and tier three to one corporate trustee? Because in terms of portfolio mix or portfolio diversification, we have put the whole portfolio into one basket. We are not seeing that corporate trustee will go down, but putting tier two and tier three, committing it to one corporate trustee, what does NIT or the regulator say about that?
Okay, Niamu, I believe you should be taking this for us.
Yes, ma'am. Yes, so he's asking about the law. The law does not indicate any requirement for you to send your tier two or tier three to or engage with two different entities, sorry, for tier two and tier three. However, the spirit behind the reforms was to create diversification, not just in terms of how your assets are invested, but also the entities that are behind the management of your assets. So yes, if you speak to the regulator and you ask this question, I would always recommend that you can look at two different entities so that you can get two different experiences. But from experience, we've also noticed that when an employer is familiar with a particular trustee, they tend to want to have everything with that trustee. There's actually nothing against that. It's not illegal. It's not an issue of non-compliance. It's actually borders on preference. Thank you.
Thank you so much, panelists. Thank you, audience. At this point, would like to bring the session to a close. The conversation shouldn't end here. Please reach out to us. You can also reach out to the panelists if you have any questions that you would need addressed. So on behalf of myself, on behalf of the organizers, which is Deloitte, we would like to say a big thank you. At this point, I would hand over to our host, Gloria Boydoku, to give us the closing remarks. Thank you, and have a good afternoon ahead.
Okay, bless. So before I give the closing remarks, there's a question I would like to throw to Cynthia, okay? I am 53. It's part of the questions in the chat, and I felt strongly we should address it. I am 53 and started contributing in 1996. I have not stopped contributing ever since. I want to retire at 55. Will I get the maximum 60% if I opt for this early retirement? What would I lose? Cynthia.
We have, like I said in the initial submission that I made, I said that for you to qualify for a full pension, you should be able to make at least a minimum of 180 months. That will qualify, and you should be 60 years, and that will qualify you for a full pension. So if you want to retire at age 53, that means even though the number of months qualifies you for a pension, your age disqualifies you, because per your age, you are not 60 years, so you can't enjoy full pension. So on that note, you enjoy what we call reduced pension. Reduced because you've come earlier than the expected time. For you to enjoy full pension, there are two conditions that you need to meet. One, the number of months of contributions to be made, and two, the age at which you are coming. So if you are coming at age 60 and you've made the minimum 180, you enjoy full pension. If you've made the minimum 180 months and you are coming at age 53, you are not 60 years. So enjoy what we call reduced pension.
Thank you very much. Okay, so before we conclude, I see Mr. Bining is still with us. Mr. Bining, any final thoughts, or is there any area you want to throw a bit more light on?
Thank you very much, Gloria and team. I would want to say a big thank you to all guests who have joined us, and particularly to Deloitte for creating this awareness and active engagement. It helps us deepen the scheme and what it has to offer. Thank you, and God bless us all.
Thank you.
Excuse me, Gloria. Please, I think I mixed up the age. Did you say 55 or 53?
55, I think. Yeah. It's
55.
55.
Yeah.
55.
The early
Okay.
retirement is 55.
Okay, that's fine. That's fine. I thought I had 53. That's fine then.
Okay. Yeah, good. Okay. So thank you so much, Bless, for a good work done. So as we drop this very insightful section to a close, I would like to express my sincere appreciation to our keynote speaker, Mr. Kwesi Afrabine, for the insightful presentation provided. Again, I would want to appreciate all our panelists, and the insight and practical guidance shared by all of them, across the many dimensions of Ghana's pension and compliance landscape. Today's discussion has clearly underscored one important reality. Securing tomorrow is not a passive ambition. It is an active responsibility. It requires deliberate actions from all stakeholders, regulators, fund managers, employers, and employees alike. We have explored critical issues ranging from compliance challenges and enforcement to the future of pension in a rapidly evolving workforce, as well as governance, sustainability, and the role of digital transformation in building trust and efficiency. One message has come through for me strongly. For employers, the call to action is clear. Strengthen your compliance framework, prioritize governance, and ensure that pension contributions are not treated as a routine obligation, but as a critical component of employee well-being and organizational responsibility. For individuals, particularly young or junior professionals, the takeaway is equally important. Do not defer your financial future. Engage actively with your pension contribution. Seek clarity and make informed decisions today that will secure your tomorrow. And for policymakers and regulators, continued collaboration, innovation, and transparency will remain key in driving confidence and long-term sustainability within the system. At Deloitte, we remain committed to supporting businesses and individuals navigate this complexity, strengthen compliance, and build structures that are fit for the future. As we leave this session, I encourage each of us to reflect on one simple but powerful question. What is the one action I can take today to better secure my future? What that action may be, start now. On behalf of Deloitte, thank you once again for joining us and for your active participation. Should you require any further support or guidance, our team will be pleased to engage. Again, I've noticed that there were a couple of questions that we could not touch on. I would connect with the technical team. I believe you provided your email and contact details. So we will try our best to reach out as much as possible with feedback on some of those questions, okay? And as we are all aware, today, Ghana is repping on the larger scale. The Black Stars are showing up. So let's rep our jerseys and support them. Definitely, I heard, is it a coach or someone saying we will bring the cup to Ghana? It sounds audacious, but it is possible. So we are all here repping. All the best. Enjoy the afternoon and have a great day. Bye-bye.